Is the market crashing? Is the market doomed? Are you losing sleep? The market is going through a bit of a rough patch right now. Hello, everyone. Welcome to Paradigm Shift. My name is Patrick Bafi. Here, we teach you how to dramatically improve the quality of your life. Boy. Time to panic. Is the market crashing? So today, let's look at this topic and see how, if the market is crashing or if it's gonna crash, how we can prepare ourselves towards that. Is it time to panic yet? Is the market doomed? You see, that's what we hear. Everyone is talking about it, right? You see, from somewhere mid-January or late January all the way till maybe today, the market is going through rough patches right now. And if I'm not mistaken, the S&P 500 is about a little bit shy over 9%. I think when you add this morning, as of today, 12 noon Eastern time, it looks as if it's about 10% down. Yes. But is it time to panic yet? Or is the market doomed? Is it? You see, and naturally the internet is going, ooh, man. The internet is freaking out. I gotta get out of here. I'm sure you've seen all these headlines and YouTube titles saying this is over. The market is collapsing. The sky is falling. And this is something that the news cycle is going to go over and over and over. And in general, the media in general, that's a lot to make this even the panic. Oh, man. Oh, my God. Oh, I can't believe this. Oh, no, God. You see, anytime there's a political change, geopolitical conflict, or shift in economic policy, and on top of, when you look at it, even last year was good, but the market was very volatile. So on top of that, it actually people want to burn it down when they see that. And they will make you feel like you should sell while you can still get something, because we are heading towards a disaster. Be careful. Be careful. Like I said, yeah, it's true. We are at crazy times right now, and it doesn't look good. But should we panic? You see, when you go through, like I said, S&P is about almost 10% when you add today down, right? But let's look at this, right? Let's take the 12 months time frame from maybe 2024, beginning of April, all the way to 2025, April today. We are still up about 11%, a little bit shy, right? And even if you go further, because remember, if we go further than that, like 30 years, 35 years, I'm not talking about the trading. People that are trading, I don't gamble, so I don't do that. So I'm talking of people that are in for a long while. We are still about 3,000% up. So do not panic, my friend. Don't. Yes, it looks bleak right now, and this is the time that people are trying to sell. People will say so many things. Yeah, I'll say it again. Here's the thing, though. Do not panic, because we are going to go through, or we are going to talk about how the market parts of the market performance, the investment behavior, and what you can do to help to avoid even if this anxiety that is going on. That is what we're going to talk about, right? So let's take into account for the last three biggest recessions or biggest downturn that happened. Let's go back into history and start. Some of us are not old enough. They might not remember some of them, but I know there are a few ones that you might remember, even if you're not that old. So let's start from the dot-com bubble. The dot-com bubble, right? And you see, anytime there's something like this happening, people will try to convince you that, and they'll have something to back it up, that we are not coming back. The market is gone, it's doomed, it's different. It's not like it used to be. But remember, even before today, we have gone through so many downturns. We have gone down so many times, about 18. When you take about the last 100 years, we have gone through about 18 times. That means we are averaging more than one a decade. And even the recession itself, we've gone down. We've done about 22 recessions. But anytime anything like this happen, people will try to tell you that this is different. It's not like it used to be. So let's go back to, like I said, the crash of the dot-com bubble, which was 2000 to 2002. You see, it went down 47%. And this time it was different. It has never happened before, because this is the time that, the dot-com is coming in, the internet and all those very hot from the 1980s and all that. And now everybody is trying to, the attention is there, and it went over there. So they were like, oh, no, this is different. In the past it's different. This is different. So this time it's gone. The market is not coming back again. We are all dead. We better sell and go buy something else. So many things were said about this. The media, yes. You see, the media, what they do is they do this to get off numbers. Same way, the YouTubes and all that. So they will tell you why it's different. And like I said, they will have something to back it up. But let's see what happens right from the 2022 all the way to 2007. The market came back and it was 120% up. So a friend of mine, we both had, example, we have 10,000 in there. I said, nope, this time is different. I took my 10,000 out. If my friend left it there, what happened after 5 years? He was way gone. I don't know what happened to my money. So yes, we have raw patches, but that shouldn't be the reason why you want to bend it up. You want to bend it down. No. So from 2020 to 2002 or 2002, it went down 47%. And everybody was screaming. Everybody was talking about how this is different, how we are doomed, it's gone, it's crashed, the sky is falling, and it's going to fall, and it's going to go up again. And boom, within 5 years, look at what happened. All right, what about the Great, that's number two. What about the Great Recession? I believe most of us will remember this, 2008, 2009, that period. It was different, because they're trying to back it up with, this time is different because even the house, it was too much. You can't take it. It's not coming back. They say so many things because, oh, this is different. Oh my God, we are dying. This is not coming back again. It wiped out, portfolios. 55%. People's portfolio was gone. 55%. So 2008, 2009 was tough. Even 2010, you know, until about 2013, that's where it started coming up. Like you can see now, this is more stable. And what happened after that Great Recession? we experienced a gains return of about 528% from 2009 to 2020. 2009. And I believe most of us will remember this. Most of us remember this because most people were victim of this. Not even if it's not you, a friend might be a victim. It was huge. And they say the same thing, that the sky is falling. It's not coming back. We are doomed. We are done. And what happened? Yes, it was a long time though, in a period of, like I said, even, we didn't see anything that was looking encouraging until 2013. That's when you could see that. But all the way up to 2020, it went up for 528%. Yes, 528%. All right. Let's look at this. Let's look at this, right? The one that I believe almost all of us will remember, the COVID crash. The COVID crash, 2020, the COVID crash. It was huge because this was a span of weeks. It dropped almost 34%. Why? Because everything was shut down. There was nothing going, there was nothing coming, nothing was happening. So in a period of that small time, and that's the time that we saw a sharp drop. And at the same time, within a period of 6 months, a sharp, that was also record up. And this time, look, because of COVID, this is different. It hasn't happened like this before because it used to be, this sickness is going to kill all of us. This doom, they said so many things. Oh my God, we are dying. Oh, then what happened? That period, 20 to, as I'm talking right now, because even though it's going down, technically 12 months period, we're still up about 11%. So all the way to today, which is April 7, 2025, the stock market came back all-time high of 200%. Look at that short period. 200%. Like they say the same thing. That is done. We are gone. So why am I saying all this? And why am I telling you all this, going through all this? What it is, I'm trying to let you know that in time like this, people will say so many things. The point I'm trying to take you through or take us through is that recession comes and recession goes. But it's fool's end to try and time your investment based upon what you think is recession or what market volatility is coming your way. Don't base on those things. And don't base on what people are saying. Go check it out yourself. Again, we've had about 22 recessions in a period of 100 years. We've had about 18 downturns in the market about a period of 100 years. And every time we had this, they say the same thing. You see, recessions and downturns of the stock market has made people, that's the time that a lot of people become rich. Why? Because it's going down and everyone is freaking out and everyone is leaving. And these people are buying because it's on sale. So people start buying when it's on sale because we've known that 18 times that has gone down, that is going to come up. So they've bought it at that low price, coming back to where it started, going down and going more anytime. Trust me, they're going to say this is different because of the tariffs. It's different. Now they're going to bring in the bricks and everything. They're going to say so many things about this. But like I said, I'm not talking about trading. That is not my style. I don't know even what it is. I don't do that. That is different. But if you're in as an investor, do not put a silence somewhere. Don't listen to that noise because it's going to do the same. And anytime it goes down, it comes back even with a good rates up. So let's say even if this is true, because this is just 3 days that it has been going down or been volatile from January, ending of January. That's when Trump took over, right? But even just this small period, we can't even with this just small period, you can't use that just 2 weeks or like a week or 3 days or 4 days. You can't even use that. But let's say even if this is true, it's going to continue going down. What can we do? What can we do even if it's going to go down, right? So let's say if it's real, it's for real, it's going to go down, or maybe it's going to even create recession or whatever, because people are saying so many things. What can we do to protect you, right? So let's see what we can do even if this is going to happen, because like I said, it's going to come back. So don't listen to that noise. Close it out. All right, so the first one, let's see what we can do. See, what we know is market fluctuation is normal. It is with us, as I was saying. It's part of it. It goes down and comes back because anything happens and people are worried about the market, it goes down. Why? We just saw what happened. If people are not feeling confident in it, if they think down the line, maybe 4 or 5 years, maybe a short time, they don't have confidence in it, what they do, they pull all their money out and they go buy something different. Maybe they buy bonds or they buy something. So we know, and can see by bonds going down. That tells you that they took it from here and, send it to bonds, right? Talking of treasury bonds, right? So this is part of us. Don't let this be something different. It's part of it, and don't take my word for it. Go check it out yourself. For the past 100 years, we use the S&P 500 as a yardstick because that's what all of us usually use. It has been up almost 10%, even from COVID up to now. If you were in there, if you had S&P 500, it went up about 80%. So don't take my word for it. Just check it out. So this is not the time that you let some people come in and tell you to go buy some product. Oh, this is the time that is good for these people that will tell you that they have some product that you don't pay taxes. A whole lot of things, when it's going down, yours is not going up. But when it went up about 80%, what did they give you? They gave you a rate of 6%, right? So what happened to that 70-something percent? So yes, it's with us. So don't be scared. Don't panic. Because even if we get out of this, it's still going to happen again. It's still going to happen again. But 100% of the time, it comes back up. So number one, understand that the market fluctuation is normal. It's normal. Don't let this media, YouTube titles scare you off. Number two, keep a long-term perspective. Warren Buffett says something that is very profound, and I want you to think about this. Sit down very well, or take your time and analyze this. He said the stock market is a device for transferring money from the impatient to the patient. The stock market is a device for transferring money from the impatient to the patient. You see, and it's so true. It's people who want to just be rich tomorrow. They want to be rich just the next week. It doesn't work that way. Even if you win a lottery and if you don't have plan, that money is gone, because we hear this all the time. People win so much money, and a period of a year or two, all the money gone. They are in bankrupt. They are filing. The next time you hear, they are filing for bankruptcy. Why? Because wealth is not built that way. You have to have a plan, and the plan, long term, is part of it. You can't just build wealth just one day. It doesn't happen that way. You see, once in a while we hear that. Even most of the time, these people that you hear of that, they have been working for so long, decades. Just their name just came up. And you can take all these companies, for example, you can take them and see, just check them out. They've been working for so long, their name were not anywhere. Nobody heard of them. Then what? They just came up. Why? Because they were down there working so hard. So wealth is not built that way. Even like I said, even if it just happened and you don't have plan for it, it will be gone. So keep a long-term perspective. And this is the time that you can do dollar cost averaging, right? You can do that. Don't time the market. There are some people that they anytime something like this happens, they take their money out and they wait till it comes up, they buy it again. I think we have to have a video about this, because anytime you do that, you lose a lot of money. They'll be like, oh, what about the time that it was going up because it wasn't going with me? No. What it is a period of about 50 years. Only about 9 times that the stock market went up so crazy. And if you weren't in there, you lost so much. And I think I'm going to talk about this sometime next week. And I can get you all the dates. Do not try to time the market. And if you're not patient, that is when your money is going to the patient. So make sure you stay in for a long time, and make sure that you are dollar cost averaging. That is, you see the what you do every week, the $100 you put in every week, the $400 a month, the $4,800 a year. You see, that is how it start building. So even if your dollar cost averaging, even when it's going up or down, you don't care. And don't worry about all these things. All you're doing is you buying your $100 every week, whether it's up, whether it's down. All you're doing is you're doing that. That is how wealth is built. It's built gradually. You see, this thing baffled my mind so much that I know anytime there's a sale, right? Macy's or Costco or BJ's, if they have a sale, what do we do? Oh, push in there to go get it. Only the stock market is a place when it's on sale that everybody is running to the door. Everyone is getting out because it's on sale. Why? I would urge you to buy more if you have the money. Because we've seen time and again that a lot of people get rich at this time because it's on sale, because the impatients are getting out. They buy so much. The ones that are patient, that they didn't have much, the little that they have, they push everything in there because it's on sale. And what happened? When it rallies back up, now they put in 10,000. Now it's 80,000. The next time that thing happened again, they put in all again. And all of a sudden, now they are back about 300-400. Then it continues. Right? So don't be impatient. Do not be impatient. Let's see. The third one is you have to diversify. It's very important because it calms your nerves down. Knowing that some of your money is not somewhere else, not everything is in the stock market. That will even calm you down. Let's say you have 60% of all your asset in the stock market and 40 somewhere else. You can invest in real estate, different things, bonds and all that. I know there are some people that they think they are so young, they don't want to go there. Yeah, I agree with you, but you still got to diversify. You don't want to put everything in there. And not that alone, even within the stock market, doing just a single stock is tough. It's good because sometimes it's sweet, right? Last year, for example, people that were just investing in what is it? Oh, this stock, Tesla and all those things. It was sweet, but try to be in group stocks that are a lot of them all together, like the S&P 500. This is the largest 500 largest publicly traded companies that are together. So whatever companies that is single is still in there. It might not get you the same thing that the single when the single is in their peak, but at least you are being moderate. At least you are diversifying when it comes to the stock market. And it's very important because you see, these nerves, these anxieties can kill you, can put you in a different situation. So make sure you diversify. We have to do that. It's very important, and not just the stock market. If you have more, trying to do something real estate, something different, you can invest in this. These days there are a lot of new startup business that are coming up. You can invest in all those things. So don't put everything in there. At least there should be something somewhere that can help you do that. Depending on your it can help you depending on the vitality of the market and also your financial goals. Invest in different things. And the next one is you have to maintain cash. Cash is king. You can't dispute that. Cash is king. Cash is king. You see, anytime you are putting money in the stock market, make sure it's something that you can walk away within 5 to 7 years. Yes, because within a period of 3 years, even if there's not like a downturn or anything, you might not feel anything. You might not see. Imagine you put 10,000 in the stock market, and even if it's making you 10%, it's about what 11,000. The next, so you might not feel anything until the 5th year, 6th year, 7th year. Then it's going. That's when you see those things. So if you want to save for something, rather use a high yield account that can get you these days. You can get it for 4%. That is fine. Do that instead of putting everything. And it can go down. Let's say you want to do something next June. You put your money in the market last year because it was good. Look at what is happening right now. It can go down. So you don't want to do that. You want to have a time frame to be able to do that, right? And not that alone. Even especially if you are retired or you are heading towards retirement, you need more than that. You see, you have to make sure you have more cash. Yes, you have to make sure you have more cash. And I would say, you should have between 3 to 6 months at least emergency fund, or at least, because look, the market might be affected even if there's recession. Cost of living might go up, inflation, a lot of things, and general unforeseen stuff that happens. It's life. It happens. So you have to have cash, because let's say it happens and everything is in the stock market and the stock market is going down at that time. What do you do? So that's why I always say, before you do all this, make sure you check all the boxes. You make sure you have emergency fund of 3 to 6 months. And even if you are, like I say, if you are retired or if you are more than that, heading towards retirement, you should have about 12 to 18 months, I would say, of your living expenses. Because usually retirees depend on their nest egg, which most of them are in the stock market to live. And if you depend on that and it's going down, that means you might sell, and you don't want to do that. But if you have that 18 months over there at the back, that can take you through that. That is fine. So yeah, it's very imperative, we have money. Cash is king. Not every money that you have to invest in. Some protects you and protects your money. And this is one of them. So even if what is going on is true, these are the things we have to start working on to make sure we are intense with what is going on. And also, I would say this: delete the app, because it's going to make your blood pressure go up. Those apps that you have that every time you can just check it, delete it, because you are in there for a long time, not a short time. Why are you checking it every 4 seconds, every 5 minutes? Why are you checking it? because you're not getting out now. As a matter of fact, most people, especially when it comes to our retirement money, they have 401ks and Roth 401ks and all that. We don't have to take them out. We have to live off them, because if it's going to get you 10% and you have 500,000, it's giving you 50%, 50,000 every year, so you can live off that. So delete that app that you're checking every day, and it's very important. You have money at the back, like our grandparents always tell us, hey, save some money when some come in your hand, because there might be a time that you need that. So yes, maintain cash reserves is important. Make sure you are staying there for a long haul. Make sure also you diversify. And this situation that we are going through, it doesn't matter whether it's the tariffs or not, it's part of the system. So if we've gone through this and come up, it's still going to happen again. So don't rely on just what is happening right now to make a long-term financial decision. Every decision that you make right now based on this is going to be a short-term, but you want to make a long-term financial decision. Because the question is, do you believe in the US economy? If you believe in the US economy, everything that is going on is to go get a piece of it. And this is how you can get a piece of it, especially when people are saying, we are getting out. You say, okay, I'll take it. Go take it. And my answer is yes, I believe in the system is still going to run for a long time. So I'm going to make my 15, 20 years plan. And still buying small, like I'm buying. The $100, I'm still buying every week or every month. Do that. And that's what is going to help you get through this. Delete the app. My name is Patrick Bafi. Make sure you spend wisely, save intentionally, and be generous. Watch